A very warm welcome to all our MojoOne investors present here for today's event. As you all know, we meet every week and we talk about the new stocks that have entered our MojoOne strategies, as well as we'll be spending some time to understand the stocks that have exited our MojoOne strategies in today's event. Without wasting any time, a disclaimer: nothing discussed in this webinar should be considered investment advice. We strongly advise all participants to check with certified experts before taking any investment decision. Investment in securities subject to market risk, past performance should not be construed as a guarantee for future returns. Investments in equity and equity-related securities involve a high degree of risk, and users should not invest unless they can afford to take the risk on their investment. Two important announcements. I know many of you all have actually heard this particular announcement, but for the benefit of the investors who have not been part, Model Portfolio and Portfolio Optimizer would be both moving to Mojo Infinity. Two of your favorite features would now be upgraded and have much more benefits than the existing view. You'll have to do a KYC, but we are here having an improvement in our execution rate from the current 5%. As you know, in Mojo Infinity, we have a much higher execution rate, okay, which is around 70 to 80%. This is happening because now you can trade directly via the small case engine. We have around 16 different brokers, so if you'll have to buy a new stock on your model portfolio or make any changes in your portfolio optimizer, you can simply do that with a click of a button. Two other important features which are not part of model portfolio, which will soon be part. One is the negative list. You can also exclude stocks you would not be able to invest in. And finally, the virtual portfolio. This would help you track your execution discipline by giving you a true picture of how your portfolio would look like if you had executed all trades on time. So these benefits would be part. Nothing changes for our existing subscribers. You all can extend for many more years down the line and continue to use both these features on Mojo Infinity and avoid any AUA fees. The link is available just below the webinar video. With that, I will start off with what we'll be covering in today's event. Before that, let's just look at our MojoOne Diwali portfolio performance. It's up 6% this time, whereas the benchmark has given around 1% returns. So we are looking at an alpha of 46% and very soon going to be hitting the alpha 50% if the market also moves in this way. One thing you must have noticed that in the past 2 to 3 weeks, this portfolio has had a very good bounce back. The benchmark has been positive. Markets, especially the mid and small cap index, has been doing well, which is one of the very strong reasons why you're finding the Diwali portfolio also perform well. These are the list of the stocks in our Diwali portfolio. Dixon Tech is the only one stock over here which is down by 17%, and Garden Reach Shipbuilders, which is down by 13%. Rest all the stocks are positive and are doing well. Even Dixon Tech, if I'm not mistaken, has had a good recovery in the recent few days as well. This is the Power Series performance update. We have now currently around 4 stocks which are open: Bajaj Finance, Bharti Airtel, Dixon Tech and Avanti Feeds. From which Avanti Feeds is up by around 38.2%, and many of you all might know this particular stock was down by around 20 to 25%, but it has given a good bounce back from there and is up by around 38.2%. We have Dixon Tech, which is down, nothing to be worried about, and 2 stocks, Bajaj Finance and Bharti Airtel, which are doing quite well. So even this list of stocks, only 2 have been negative, and I think it's quite a good hit or success rate, you could call it, where 8 out of 10 stocks are currently in positive. Right? This particular list of stocks has now almost completed 1 year, where we had actually revealed this list in March 8, 2025. This is the major indices performance of last 1 week. Here you can see Nifty Realty having a good bounce back. This is primarily this index has not been doing well in the previous few weeks. This time it has had a bounce back. PSU banks leading next. As you all know, many of the stocks we recommend are also part of the sector. Small cap up by 5.22%, followed by mid cap up by 4.81%, and lastly Nifty has given 3.10%. So the last 1 week has had a positive movement across all indices. Only Nifty IT is one particular sector which has not done well. Many of the investors are also confused what is exactly happening with IT. There have been a few news articles which have come out. I don't know if you all might know about Anthropic Cloud, where they recently released a new software which would help companies actually look at legal requirements. When that news came out, not just Indian companies, even European companies took a downward trend. But this particular sector is revolving very fast, and any particular news might have a sensitive reaction on the Nifty IT sector. So I'm not sure how many of you all are actually allocated to that particular sector, but I'm very much sure that many of you all might be having finance, banking stocks, which have done quite well in the last 1 week. Today's strategic focus areas are going to talk about these 4 strategies. We have stocks which have entered Mojo stocks, even hidden turnaround. We also have momentum and reliable performers. As you all know, Mojo stocks has been one of our oldest feature. Here we look at the top 1% stocks at any point of time, followed by hidden turnaround. Here we look at stocks which are showing early signs of business recovery. Then momentum now, where our goal over here is to enter the stock and exit as long as the company is enjoying a momentum phase in the market, followed by reliable performers. Here we're looking at some consistency in the result performance of companies. Now, since we are in the middle of a result season, it is possible that many new stocks will enter. This is why this time also we have around 8 to 10 stocks entering, and many stocks might exit as well. The purpose of this event is to give you an idea as to why have these stocks entered, and also the stocks which have exited, we'll be covering why have they exited, and if you'll actually need to also remove them from your portfolio. Okay, this is how our 4 different strategies currently look like. We have around 73% of our stocks in Mojo stocks list from large and mid cap, and the other strategies, as you can see over here, are mostly tilted towards the small and micro cap index. Right? This is also because these strategies also look at hidden opportunities and high growth potential stocks, whereas Mojo stocks tries to pick the best from the market. So many of these stocks might be bigger players from large and mid cap indices. These are some of our top weekly performers by different strategies. Here you can see Mojo stocks. We have Force Motors, Bank of India, Polycab India. In hidden turnarounds, we have Apex Frozen Foods up by 29.8%. Momentum now also we have a similar stock, Apex Frozen Food, GE Power, Force Motors, and finally reliable performers we have Shaily Engineering, RBM Infracon, and Balu Forge, which is up by almost 19% each. Now you might have these stocks in your portfolio, but even if you do not have the top weekly performers, it is very much possible that you had a lot of stocks, especially from small and micro cap, which have done well even in today's market. I would not suggest you to take any particular conclusion in this. Yes, we are having a lot of tailwinds in the market, a lot of news supporting the Indian market rally coming forward, but I would not suggest you all to get very much excited by these, the movements in some of the stocks. At any particular point of time, if there's any exit, you all should also have that in your portfolio. I'm not sure how many of these stocks are actually giving you profit from these list of stocks. Now let's move on to the new stocks that have been added. We have 5 stocks in the Mojo stock list which have been added this time. Indian Bank, IOCL, Cholamandalam Investment and Finance, Canara Bank, and Bharat Forge. Many of these companies you all might have surely heard these names, primarily because they are also the top 1% stocks in the market currently. I'll do one thing, I'll quickly take you across each of these stocks. If there is any particular thing, we'll also go back to the website and dive in a bit deeper. Starting off with the Indian Bank, it's a leading PSU bank headquartered in Chennai, close to around 5,850 plus branches. Its total business exceeds 14.30 lakh crore. Strong focus on the retail, agro and MSME segments. Also, its capital to risk weighted assets ratio of 17.31 with an improving asset quality. Here you can have a look at its financials. It's declared its results. Net profit has grown 7.3% year on year and 7.5% growth coming in with the revenue. Even quarter on quarter, the revenue has increased, but yes, the net profit has taken a hit when you compare it with the immediate preceding quarter. You've seen a 7.5% net interest income growth, 2.23% gross NPA, and a 0.15%, one of the best in the class in the banking sector. Gross advances have grown, deposits have also increased, which is definitely improving the margins of this company. Even the RAM portfolio expanded 17% year on year. Provision coverage ratio has also improved to 98.28%. Okay, we've seen banks actually do well in 2025, and even in the start of 2026, what we can see is this particular sector is actually doing well. And I think back in 2025 itself, you are actually making the statement that banks and the finance NBSE stocks would do well. The momentum seems to be continuing now. We have IOCL next, Indian Oil Corporation Limited. It's one of India's largest oil refining and fuel marketing company. Okay, a Maharatna PSU operating 10 refineries is close to around 80.75 million metric tons per annum capacity. 40,221 retail outlets, a 20,000 kilometer pipeline network, expanding into renewable and green hydrogen. It has seen an excellent growth year on year with regards to its net profit of 321%. Right, even a 59% growth in its bottom line when you look at quarter on quarter. The 322 profit surge has come. The net profit has jumped to 12,126 crore, and this is driven by the sharp refining margin recovery. Even the gross refining margin, which is at around $8.41, the refining margin has now doubled from the 3.69 level, and that's why you can also see a major growth coming in with the net profit. Right, this particular increase over here might raise a question in many of the investors' mind, and it's come primarily also because of a very good improvement in the refining margin. Strong throughput as well. Refining throughput reached 19.43 metric tons versus the 17.61 in the previous quarter. So this company has seen an excellent and fast growth coming in. The domestic fuel sales rose 5%. Product sales also reached around 26.02 million metric tons. Government compensation of 2,414 crore recognized for LPG under recoveries. Petroleum products segment contributed a profit before tax of around 16,836 crores. Right. Next up, we have Cholamandalam Investment and Finance, another NBFC company. AUM exceeding 2.14 lakh crore, capital adequacy ratio of around 20%, cash balance of around 17,000 crores. Here you can have a look at the net interest income. It has grown by around 17.3% year on year. Even the net profit has grown by around 18.5% year on year. Few things over here. This is also the loan growth in 4 of its major segments. Vehicle finance has grown by 17%. Loan against property LAP has grown by 33%. Home loans are 28% growth, and SME and equipment portfolio has also grown by 28%. Right, the guidance has been given of a 20% AUM growth overall. Okay, for FY26, which has been reiterated. AUM has grown 21% year on year to around 2,14,900 crores. Right, the NIM, net interest margin, has also expanded to 7.9%. This particular stock, if I'm not mistaken, has been in our buy list since a long time now. It's up by 1.6% today. Right, buy and hold zone is around 365. Last 1 year itself, it's been in the buy and hold zone. So this company has remained in the buy or the hold range for a very long period of time now, which is why it also has a very good quality, great, excellent quality. Primarily because the sales growth, EBIT growth, and the consistency has been good with Cholamandalam Investment and Finance. You have Canara Bank as well, another banking stock coming in the list. Please understand that if you don't simply go and add all these banking and finance NBFC stocks, don't take an overexposure to the financial sector. Pick up 1 or 2 stocks to invest in instead of adding all of the stocks in Mojo stock list. For example, if you're adding or creating a portfolio this week, because you'll anyways have a big exposure to the finance and NBFC space or the banking space, right? The total global business for this company exceeds around 27 lakh crore. It has a strong focus on the RAM credit segment. Net interest income has remained at par both quarter on quarter, year on year. The growth you can see over years, which is coming in the bottom line, right, with the net profit improving both quarter on quarter and year on year. It jumped 25.6% year on year to close to around 5,155 crores. This is in spite the net interest margin has declined. Domestic advances has grown 13.3% year on year to 11.19 lakh crore. Manager also expects the NIM to stabilize at around 2.45 to 2.50% and has given a revised credit growth guidance of 13.5% for FY26. Next, we have Bharat Forge, which is a flagship company of the Kalyani Group, and it's one of the world's largest forging companies manufacturing components for automotive, power, oil and gas, construction, mining, and defense sectors. Global footprint, apart from India, it has its footprint in Germany, Sweden, and North America. Defense expansion as well, Kalyani Strategic Systems developing artillery guns and armored vehicles. This is also one particular sector which has done very well if you look at the last 5-year range. And I think in the last 1 or 2 years as well, the defense sector and all defense-related companies have seen good growth coming in. E-mobility focused strategic expansion into an electric vehicle components as well. This is the consolidated revenue. As you can see, a 23% growth coming in year on year with its net profit, and also a 5.3% growth coming in quarter on quarter. Okay, some key challenges and outlook. North America impact, the standalone revenues declined 7.5% quarter on quarter. Okay, consumer vehicles exports fell around 48% quarter on quarter and 63% year on year due to emission norm rollback and also the tariff uncertainties, which have now softened with the recent India-US deal. New orders worth 1,582 crore in first half for FY26. Order book stands at around 9,467 crores, which is quite a good point for this company. Growth in the Indian industrial business, non-US exports and defense ramp-up expected to offset the North American weakness which the company is actually facing. So the bad news is actually, settled down. Here we can expect this company to do well going forward. We can also have a look at how the price movement has been and how it reacted to the different headwinds it faced in the recent past. I will soon right, so this result we're talking about is the second quarter. It will soon declare its results, so we're keeping a keen eye on this stock. I think the results will be coming in on 12th Feb, which is around 3 days from here. So we'll get a clear idea as to how the stock would be doing. Right, despite negative news, the company has been able to do well. It has given 2x of the returns compared to the auto and components and equipment sector. It's done extremely well. Right, last 1 month also it has given 9.7% return and has moved very close to its index. Today it's up by 1.64% as we speak. Now we're moving on to a slightly different strategy. We have 4 new stocks that have been added in hidden turnarounds. GRM Overseas, a rice and rice processing company. Awadh Sugar, Westlife Food World, okay, master franchise for McDonald's, and Sheila Foam. Many of you all, I don't know if you all actually know the products of this particular company. Right, it has a lot of different brands under its business, like Furlenco, also I think Sleepwell mattresses, and Kurlon. So we'll be talking about these 4 different companies. I'm not sure if you all would be knowing the company simply by its name, but if you dive a bit more deep into its products and what it caters to, you'll definitely get an easy idea on these particular stocks. Starting off with GRM Overseas, it's one of India's leading rice processing unit. Okay, it's engaged in basmati and non-basmati rice for both India and international markets. Branded rice under 10X and GRM brands, exports to 50 plus countries, and has its manufacturing facilities in Haryana. Here is the quarter 3 results. We've seen the performance come in. Here if you can see, the net profit has increased, operating profit has increased, as well as the revenue from operations have all increased both in the quarter on quarter and year on year period. 29% revenue growth, branded business also crossed 200 crores for the first time. EBITDA margin has also improved for GRM Overseas. Now to get a better idea as to why this particular stock entered, here you can see it has a score of hold at 58. Right, and here if you look at its financial trend for this particular quarter, you will get an idea as to why it has entered. Here if you see -4, -6, -9 has improved to -8, and this time's quarter has given a score of 10. We can see the price also moving up in a similar manner. Correct? The high of this particular stock was much back here in 2022 when it hit a high of 271. Since then, it has actually fallen downwards. And the stock price went up to 44, 45, but now it has started moving upwards. Right? So we are entering at not at the height, but yes, it's showing some signs of recovery and definitely a good time to enter. You should also consider the risk because the stock, which was at 271, has also touched levels at 40. People who had could stomach the volatility has stomached, but now the stock has gone up to 173, 160 currently as we speak. Next up, we have Awadh Sugar and Energy. It's part of the KK Birla Group and largest sugar producer in Uttar Pradesh. 4 manufacturing facilities producing sugar, ethanol, and cogeneration power. It partners with around 2.90 lakh farmers. Now, it's a hidden turnaround company. Here you can see the net profits from a loss-making company in the last quarter has now moved to 19 crores profit. Right, the revenue from operations has remained stable overall, but the growth or the improvement has been coming in from its operating profit and net profit. Please also understand these sugar companies, when the quarter and quarter two, they have an off season. So it's better to compare it with the year on year periods. Quarter three and quarter four is when, the ramping up and the crushing season picks up. So revenue has grown 3.4% year on year during the peak crushing season. Profit before tax has also surged 214%. Company swung to a net profit of around close to 19 crores. Quarter 3 and quarter 4 are typically the strongest quarters due to the crushing season. Debt to equity ratio has also improved. Management's focus on ethanol blending and co-generation provides diversification beyond the cyclical sugar business we can see. Which is why many of the sugar companies also depend on ethanol blending. Whereas in the quarter 1 and quarter 2, where it's an off season, the company can still maintain its margins or increase its revenues going forward. Next up, we have Westlife Food World. It's a master franchisee for McDonald's. Has its presence in West and South India, and now it's targeting around 580 to 630 restaurants from the current number of 458 restaurants. Okay, it runs through Hardcastle Restaurants Private Limited, the name. Revenue from operations, you can see over here, has grown. EBITDA has also grown. One thing where the company is lagging is the bottom line. I would not suggest you all to actually look at these numbers because it's a very small amount, but it's actually magnified because of its increase and drop. Okay, so soft quarter with recovery signs. The revenue has grown, to 671 crore, but it has been impacted by the negative SSSG, which is nothing but the same store sales growth. Okay, it's a critical ratio for companies like which engage in this franchise business, and it actually calculates revenue which has come from one particular store, which has actually been operational for at least a year, so that you can actually exclude any of the new branches which have been opened. So the same store sales growth has actually gone down by 3.2%. Adjusting for exceptional item, the cash PAT grew by around 12.2% year on year to 58 crore. Jan 2026 saw return to positive store sales growth. Expansion guidance of around 580 to 630 by end 2027 has been maintained. So the company is on its path of recovery. You can also visit the company on the website to get a better idea. It's currently sell at around 37. Here, if you look at the financial trend, from negative quarters it actually moved to 8 at positive. Right, profit before tax has been positive. Net sales is also highest in the last 5 quarters. Operating profit is also highest in the last 5 quarters. So the company is still now pushing upwards and improving from here. Next up, we have Sheela Foam. It's India's largest mattress manufacturer. Many of you might be knowing the bestseller brand of Sleepwell. Post the Kurlon acquisition in 2023, and it's now a dominant player in the organized market. Mattresses, foam, as well as international operations in Australia and Spain. Now, if you look at the bottom line, it has grown by around 430% quarter on quarter and 211% year on year. The company has done extremely well in the recent quarter 3. If you see the year on year growth, mattress volume, foam segment, its own website as well, and please understand its own website, the profit margins would be much higher over here if this segment grows, which is a standout in this time's quarterly performance. Right, the e-commerce channel was standout with its own website sales growing 138% year on year. Profit after tax margin also expanded to 4.8%. Many companies over here, list their products on different websites. You end up paying some cut to that particular website. But when you have your own website doing well, the money is coming straight back to your own business, which is one positive point this time for Sheela Foams. Platform sales has also grown by 39% year on year, so the company has done extremely well. The integration with Kurlon has been finally paying off for this company. It's up by 3.14% today, has a score of 51 hold. Right? You can see over here, the company had negative performance since Jan 2023. Even the price kept falling downwards, started making new lower lows. This is the one small sign of hope we can see, where the company, in the price has started moving from 500 to 600. Please understand this company was trading much higher at 1900. So you're getting it at a very, very attractive valuation. Right? You can make your entry from here at around 607. The risk over here is that the company should now do consistently well. It's not just one quarter of 50 crores performance which would help the company, or one quarter of the net sales being highest. If the company continues to do well going forward, you're actually going to enter the stock at a very attractive price. Okay, from all the turnaround stocks, when I was seeing one particular stock which I really preferred personally is Sheela Foams, the way it's actually transformed its business, growing with its own website sales, and also getting it at a very attractive price. Especially in hidden turnaround stocks, if you're getting it at a very attractive price, the downside is a bit less versus getting it at a very expensive price, because they are high beta stocks, mostly small and micro cap. They move very fast. So Sheela Foam looks like a safer bet compared to the other hidden turnaround stocks. Now we are moving on to a different strategy. We're looking at reliable performers. We have Valent Communications from the telecom sector. It's a microcap company, again a very small stock. Before adding it into your portfolio, please understand and learn more about it. We can also go on the website and quickly look at Valent Communications. It's 75 buy, up by 1.42% today. It has hit its 52-week high of 1047. Right, so you're getting it at a higher range. There's recently been a bull deal as well. Oh yeah. So some of the investors who don't know, it was incorporated back in 1993, and that time it was promoted by Inder Mohan Sood and Devendra Mohan Sood. Now it's currently a public limited company over here. It's a New Delhi-based manufacturer of communication and transmission equipment for power utilities, oil and gas, railways, metro rail and airports. Okay, IP multiplexes and tele protection equipment, GPS primary reference locks, also debt-free with a net debt equity of negative 0.39. Revenue from operations has increased. Even the net profit has seen a big bounce back. From being almost a loss-making company at the border, it's now at a comfortable 6 crores profit, and this is the most recent result of this company. ROE at around 19.06%, nearly double from the 5-year average. ROCE is also half-year performance has peaked. Net margin has improved. Record quarterly net sales of 22 crore with operating profit hitting 7.7 crores. 4 consecutive quarters of positive results. Zero debt balance sheet has also been maintained for the stock. Stock reached a 52-week high of 940 in Feb 2026. Now this 52-week high has also been surpassed, and it's now at a 52-week high of 1047. To get an idea of its all-time high, I think we can get the price over here. I think it's, yeah, the all-time high is similar at this range itself. So compared to the other companies, we're getting the stock close to its high. Not a major problem to be worried about. I know some of the investors who always want to get the stock at lower levels, but nothing major to be worried about over here. Yeah, it's currently at its all-time high range. Now we have one new stock which has been added into the Momentum Now list. Here we're looking at both the financial trend to be doing well and also the technical of the stock to be doing well. These last two parameters have to be doing well for a company to enter the Momentum Now list. Chandigarh-based pharma company transformed into a pure play finished dose formulations. It has divested its API and the CRAMS business. Nothing but the contract research and manufacturing services. Okay. Here these companies contract out their drug development and production to third party. It has a presence in 40 plus countries and is now on net debt free post the divestment which has happened. Revenue from operations has really improved. You can see a 5.4% growth year on year. From a loss making company, it's moved to profit making of around 11 crores. The growth roadmap, it has a target of around 1,200 crores by FY29. So it's quite a target which is set very high for itself. CAGR of 20 to 25%, margin expansion of around 250 to 300 basis point, and also a wide risk partnership starting from the fiscal year 27. Major milestone, API and CRAMS business has been divested to Synthemed Labs for 1,650 crores, making it a net debt free company now. So now it's playing positioned as a pure play FDF platform with high margin segments, only focusing on the finished dose formulations, divesting its API and CRAMS business. Let's have a look at in Swift also. 5.66% up today. Right. Entered the strategy list today itself, I think. It's entered on 5th Feb. So the stock has remained in the sell zone for a very long time, 361 days. It is now very recently moved to the hold zone. And if the factors improve, it will definitely go to buy and strong buy. So there is a lot of scope coming in this company. It has been in the sell zone for a very long time and has been a depressed stock over there. But in the recent period, you can see the company has started moving upwards, which is our main target on why we are entering this particular kind of company. Okay. Now we're going to be talking about the stocks which have exited the list this week. We have around 4 stocks from Mojo stocks which have exited the list this week, and Bharti Airtel which has exited the reliable performer list. I also added the reason. We had a request by some of the investors. I'll take it with each of these stocks. You all might be holding them in your portfolio. So let's actually see whether you should exit them. Starting off with Tech Mahindra, it has exited the list of Mojo stocks. And as you know, any stock which score falls below 70, it exits the Mojo stock list. Now this stock has fallen primarily because its technicals turned mildly bullish. If you have a look at the technicals, it has turned mildly bullish. Okay. And in the monthly period, slightly mildly bearish. Now weekly it is bullish, monthly it is mildly bullish to mildly bearish. As an investor, if you're looking at taking an exit on this company, right, I would suggest not to take any particular exit. It's currently still at hold. The financial trend is good. You can continue to hold this company without making any change in exiting. Right? Even if you look at the entire auto sector, it's the second best stock in terms of score compared to its closest peers. Right? Sorry, I'm talking about the tech sector. So you do not need to make any particular change. Only LTI entry is higher than this particular company. Right? Next we have Humans India. This stock is also 65 hold, up by 1.5% today and is doing well. The score changed because the financial trend also turned flat for this company. Right? You can see the company's financial trend has been disappointing and has moved down to the hold. Now, since it became a hold rated stock, it exited our Mojo stock list. Right? The company declared its results on 5th Feb. Since 5th Feb, let's look at the last 1 week performance to get a better idea. Right? The company declared its results over here, and then it had a sharp drop coming in. Then it opened up and it started moving upwards. It's currently 65 hold, very close to the buy range. Again, if you're holding the stock, you don't need to make a major exit happening, a quick exit. You can continue to hold the stock. Then we have Persistent Systems. For this company as well, the technicals softened, which is why it exited our list. Right? You can see the technicals over here. It's now sideways as we speak for this company. The company has declared its result. It's fallen slightly from 28 to 25. Again, very close to the buy range. It has a score of around 61 hold. My personal opinion, if in case you're already invested in this company, you could kind of continue also remaining invested in this company. The technicals are improving even though the company has not declared a very good result. Right? Compared to its previous quarter, the company has not declared a very great result. I would suggest you all to continue holding this company going forward. Then we have Narayan Hrudayalaya. It's come back to the buy range. It exited and then it came back to the buy range. The result will be out on 13th Feb. Still, continue holding this company. Don't make any particular change. It's up by around 2.2% today. I would not suggest making any change. What happens many times is a stock, it moves from 70 and goes below, and then it comes back to 70 and above. So it exits the Mojo stock list. You don't need to make an exit in your portfolio. You can continue to hold Narayan Hrudayalaya. Last we have Bharti Airtel. It's at 68 hold. I would suggest to continue holding this stock. It's also part of our Power Series list. Now it's part of the stock of the month strategy as well, so no particular change likely to be made over here. Now the financial trend is positive, but it has exited our reliable performer list because it saw lower CFT score. Right? Your score does not simply need to be positive. It can take an exit if it sees a lower CFT score, which is primarily what happened here this time. Nothing to be worried about. Don't need to panic. Continue holding these stocks. So all the exits which have happened this time, I would not suggest you all to make any particular exits in your portfolio. Continue holding these stocks. Now you understand the reason as to why they've exited, so you can continue holding them in your portfolio. Bharti Airtel is your call. If currently it's still a stock of the month, so I would not suggest any of our investors to exit it. But the first four stocks in the Mojo stock list which have exited, the score is very close to 70, and these companies have done quite well, so you can continue holding them instead of making a quick exit. This is the MojoOne Diwali portfolio performance for some of the investors who've come in late. It's up by 6% this week versus the benchmark, which is up by only 1%. This is the Power Series performance update. Here you can see we have two stocks which have been closed. Two stocks in negative, one stock in negative currently. Dixon Tech, nothing to be worried about. We've got a lot of questions on Dixon Tech in the recent period as well, and it's up by 2.24% today. I think the company is seeing a good recovery coming in. Last 1 week it's up by 13%, and last 1 month it's at the same level. So I just hope that many of the investors a week ago actually did not exit this stock. I know we had asked this question was asked in this webinar as well. What should we do with Dixon Tech? And we got back saying that the company has hit its bottom range. There's been a very good movement come up. It's up by around 13% in the last 1 week. Right, if I'm not mistaken, I think the sector as well has done quite well in the last 1 week. The sector itself has given a 12% gain in the electric and appliances sector. Right, so continue holding Dixon Tech. Just a small announcement, we will be soon having the model portfolio optimizer moving to the Mojo Infinity platform. Nothing changes for our existing subscribers. You can continue enjoying these two features. If you would like to extend your plan, the link is available just below the video for you all to make an extension. With that, I will start off with picking some of the questions which you received by the investors. Right, I'll pick this first question. This is by Balasundaram. Hi Jason, it has been a while since the sector top stocks were shared by Mohit and may have been running negative. There hasn't been any review or update on the hold and sell. When is the review being planned? Definitely, we have a look at these particular, these stocks are monitored by our research team regularly. What we had initially promised is a quarterly review. Instead of having a weekly or a monthly review, we realize a lot of investors stare at these stocks and get a bit, worried as to what exactly they have to do. We'll be definitely having a weekly review, and since many of the investors are also asking, I'll have a word with our team and see if we can have this review a bit earlier than promised. Portfolio is down by around, if you can just see my screen, portfolio is down by around 6.5%. Sensex has been down by 1.36% in the similar period. Right, today the portfolio is up by 1.77%. Right, it has given 3x returns of Sensex. Give it some time. We have the stocks recovering. So, for example, Artemis Medicare was down by 16.10%. Radico Khaitan was down by around 14.11%. Both these stocks have recovered. The one question which one particular stock which many investors are worried about is IFB Agro, which is why I also picked this question by Abhay Singh. You asked on IFB Agro as well. Currently, the stock has a score of 61. There's nothing majorly to be worried about. This question was by Abhay Singh, which is why IFB Agro is down by 35%. Any suggestions? Continue to hold this stock. There is nothing majorly required to happen over here. Right, if you see my screen, it's currently at a mildly bullish range. It was bullish before it turned mildly bullish. Last 6 months, I think the company has given positive returns, but has fallen from its peak. See, we had invested back over here in 31st December, right? Since then, the company is actually moving downwards. Let's give it some time. Definitely, when we have the review, we'll also be looking at this particular stock. Your call on happiest minds. I'll just pick this next question. I've not followed this company much. Currently, it has a score of 57 hold. Let the result come on 9 Feb and definitely we'll pick this question again. It's up by around 2% today. Looking at its past financial trends, the company has been not consistent in nature. But one thing which is very nice is that the company saw negative financial performance, has improved it, but the stock's price still kept moving downwards. Right? This is a very, I would say a rare case scenario when the company is doing well with regards to its fundamentals, but it has not done well with regards to the price movement. You know, Many things we need to also consider right now in what this particular company is doing, right? With regards to cloud computing or even business intelligence. Uh, the IT sector itself is facing a downward trend. AI might take these stocks with a wave. I'm not really sure if we also understand that Indian companies don't have the best footing. Not just Indian companies, and some European companies have taken a hit with AI moving at a much faster pace in the recent period. My personal opinion on this particular stock, if I was in your place and looking at investing, I made the statement last time as well. When it comes to IT stocks, I'm looking at the US market currently because they're leading the pack. If you want to take IT exposure, that's a good avenue or a good set of companies over there to actually consider. If you just share my screen, what I can do is also, if you're the most comfortable way of investing is just simply going to stock of the month. I'm not sure if many of the investors have the US plan. Look at the US stocks which I have done currently over here, 77% up since 10th August. Okay, since 10th September it's up by 54%, 37%, right? You can have a look at these stocks over here. Or if you want to go and invest in some of the IT related stocks, you can simply go over here, sort the Mojo stock list, and pick companies which are from the related sector. Right? You can also otherwise go to the screener list, select your country, and then select companies from, let's say, the IT related sectors. Right, from here in the industry, you can select, let's say, fintech companies. Right. Right, you can pick up companies from here, sorting it out. So you have Calix, Anterix, Sienna Corporation, some of these companies over here, where you can actually go ahead investing in. I'll just pick this next question. This is by Manohar. Thank you for the webinar. To share the financial planning Excel file, this will be really helpful. Bashir, if you can just make a note and share the Excel file with the investor shortly prior to this, after this webinar. I'll pick this next question by Avnish. Hi Jason, I know the team is working hard to make difference to its customers, but my personal observation is that the IP has started to lag behind once market is range bound or in downturn. If IPs improve to capture such trends and stock suggestions are turned, model portfolio can do much better. However, with current scenarios, what's your guess on when model portfolio will start outperforming the market? So it's a very valid feedback. We definitely been looking at it. We've been being very vocal with this as well. In the recent bearish market, we've seen these stocks not do well. I'm not trying to compare us with any other particular investment. I'd advise you to give you a better example. But one of the recent new things we're looking at is also market facing would definitely help us. We are actually working on improving the IP day in and day out. The recent market, I'm not sure. We are one of the investors saying that the model portfolio is not doing well. Some of the investors have actually written back saying the model portfolio is doing extremely well in the recent period. So I would suggest to give it some time. One thing which is for sure is that yes, the market has finally started bouncing back. So that is quite a big positive for the market. Let's give it some time. Let's monitor it. Anyways, I come in front of you weekly, and even the founder and the management team also come in front of you all once in every week. We'll definitely have a look at this. Let's give the market some time. I know many of the stocks which have done extremely well today, but it's not just a 1 day performance or a 2 day performance. We will need to give this market a bit more time to understand that. My call on when the model portfolio should bounce back. We've seen model portfolios do extremely well in bullish periods. And by extremely well, I'm talking about, we've seen portfolios during 2020, 2021, 2022 bounce, move up by rates 180 to 200% in a year. I'm not guaranteeing those returns. My point is that that was a different phase in the market. With the bullish, market already stepping in, we should definitely see the model portfolios do well. Let's give it some time. We are anyway sitting very close to each other, and you can definitely ask this question. And within a week's time, we'll get a better idea as to how the IP is performing. Ritesh Mahajan has asked what's the tentative timelines. I don't have any timeline as such for now, but it will be happening very soon. And nothing to be worried about right now. Whenever the change will happen, it won't happen immediately. We will definitely give you all intimation on email and WhatsApp that this change would be happening. We will definitely have a webinar on that as well. We will surely let you know that when this change will be happening for model portfolio optimizer. Sonia Mitra, you asked if the offer for US is still open. It's currently not available on the website, but Bashir, if you could just make a note and send the link to the investor shortly after this webinar. If anyone else will also want the offer for US, we are giving it at 19,999 for 5 years. That's a big steal of around just 4,000 per year. Full access to US market for 5 years. And if you have any upcoming features, definitely it would be part of the US plan. RB has asked a question, how do you assess our portfolio diversification across market caps and valuations? Our portfolio section is quite well equipped. If you share my screen, you can go here in personal portfolios. Now, everyone might have a very different story, but one thing you can do here is that here in diversification, you can simply see how your portfolio is doing across large, mid and micro cap. Now, what you might think might not be true. For example, I have this large cap stock, Polycap India. It's given the most returns. I have 40% in mid cap, for example. It's given minus 3.28% returns. And in small cap, I have 30%, 20% in micro cap, and these are my laggers. Please understand that large cap is the one index which has done well. This is the sector portfolio. The rest, all the three indices have actually given some amount of negative returns. So this would give you a better example as to how to look at your portfolio across different market caps. Now, what it goes by is that mostly the small and the micro cap stocks give you the return in your portfolio, but this is a good eye opener, pop-up to look at. Any of you can also go back to the website. It's very easy to get this section. You have to go to the portfolio section and move to Analyzer. Once you move to Analyzer, you can click on Diversification and then Diversification by market cap to get a better idea. Right, I think I've picked up most of the questions by the investors. If you'll have any more questions, you can definitely drop it on the chat box and we will look into that. Looking forward to seeing you all come for the events in the future as well. We have our Stock of the Month event happening very soon. And we'll also be having the Infinity Performance Review and event for the PMS investors. We'll also be looking at having an event for the US market specifically this week. So looking forward to seeing you all come for all these events. Goodbye and have a great week going ahead. Thank you so much.